Hi, good week to all. This is Calvin here. Welcome to this week's latest edition of our weekly technical outlook on the major stock indices, where I will cover the key technical levels to watch as well as the trend bias on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German 30 index for the week of 16th of August to 20th of August. So let's take a look at the disclaimer slides first. All right, so let's have a quick glance, right, of this kind of say raw momentum data on the various major stock indices across the globe. So what we have is the SPX 500, the Nasdaq 100, the Dow Jones Industrial Average, the Russell 2000. So that comprises of our US stock market in general. So what we have over here is that last week weekly performance. What's kind of overall is still positive. Over here, we could see the SPX 500 is up 0.7%. The Nasdaq 100 is slightly almost unchanged. But what it did over here is it managed to recover its earlier underperformance, the earlier losses at the start of this week, to actually shape a very strong move on last Friday, okay, after the release of the weaker than expected consumer sentiment data for US. So the strongest will be the Dow Jones Industrial Average. Why? Because of various cyclical sectors that are actually kind of a supporting this particular heavy-weighted cyclical index, which is primarily the financials and industrials. So typically, is to me, it's more like a kind of an extreme level of underperformance that was seen at the start of this quarter, where you see a bit of mean reversion play rather than a trend change. All right. So later I'll share with you more about this. Yeah. So the Russell 2000 is still underperforming the small cap, which is negative 1.10%. So if I what I would do over here, if I were to do comparison with the 4-week average, last week minus off its prior 4-week average. Overall, everything is still kind of a positive, except for a slight negative in Nasdaq 100. The one that is outperforming the most will be last week will be the Dow Jones Industrial. The one that's still underwater is kind of a lackluster will be the small cap Russell 2000 at negative 0.8%. So what we could see over here is the Hang Seng Index and Hang Seng Tech Index. The same old story for a couple of weeks ago that we did mention that these two are kind of a underwater. I would say that pretty much drastic underperformance against the rest of the world. Why? Because of the ongoing regulatory uncertainty on the China big tech stocks now spreading wider to the breadth of the entire China economy. So every investor or trader now is not certain which particular stocks in which industry will get hit. So anything that is kind of a deemed as a social ill in China society will seems to have some kind of stringent measure that is being targeted at them. But if I were to look at the performance of the numbers, the numbers of the Hang Seng Index, the Hang Seng Tech Index, it seems that the sentiment is now slightly improving, which is slightly better. Why? Because you look at last week performance is 0.81% on the Hang Seng Index versus its prior 4-week average, right, which is negative 1.04%. So it managed to have a positive differential at 1.85%, which is good. Yeah. Then even though last week the Hang Seng Tech Index, which comprises of the majority of the China big tech stocks like Alibaba, Meituan, they have Tencent. Because these are the JD.com, those are the lights. So it's still negative in the red, negative 6.1, but the negative performance seems to be getting smaller compared to 4 weeks ago, which is negative 2.5%. So that gives a positive differential of 0.89. All right. So, but nevertheless, we still got to have a closer watch on this particular index at this moment in time. So whatever rebound that we see right now is more or less kind of a tactical rebound, rather than a clear signs of a major basing formation. Because we need to have more data to actually kind of confirm or have a higher probability from here, because we never know that momentum could actually get worse. And that means, i.e., the downtrend since in place since February high this year could actually continue. All right, so need to have more kind of data to actually say that hey, the Hang Seng Index, the Hang Seng Tech Index has really reached kind of a major bottom. Then from here we start to base. But nevertheless, at this moment in time, it's not concrete yet. So what is pretty much in terms of probability right now is more or less in the positive side. It's still a kind of a tactical rebound. Okay, tactical rebound. We talk about a multi-week kind of a rebound Then from there we see how it goes. Yeah, potentially. So then the Nikkei 225 is still stuck. Okay, to me it's still stuck inside this very complex sideway complex consolidation that also in place since February high. So last week was 0.56% versus the prior week is almost slightly below negative 0.10. So give you a positive differential of 0.66. Then what's the most interesting over here is the Nasdaq, no, the German DAX, pardon me, the German DAX. So 2 weeks of positive performance. As you could know that German DAX last week has a decisive break above the 2-month high level that I share it on the chart, a 2 months range higher that actually start to take it to make it a fresh all-time high. Finally, after 2 months of consolidation, so this is what we came in our expectation. So in terms of momentum wise, it's pretty much encouraging. So you look at the differential is 1.25%, 1.25 versus the prior 4-week average, which is 0.12, and rather strong outperformance last week at 1.37. All right, so now let's have dissect on the 11 sectors of the S&P 500 its weekly performance last week. So if I could see over here, right, there's no clear sign that cyclical is actually outperforming. Despite the Dow Jones Industrial Average has is the highest has recorded the highest performance last week among the four major US stock indices. You look at energy, energy is still very weak. Is the only one that is negative last week, have a negative return of 0.82%. And what's powering the cyclical right, is only the financials, 1.88, and as well as the industrials and materials that are still doing fantastically well last week. So then you have the information technology almost unchanged at 0.07%. So what we could see over here, right, is to me, is as I still view this that it's not a very clear signs of cyclical outperformance yet. It's more kind of a mean reversion kind of short-term rebound. What we could see since the start of this quarter and even late Q2, that the cyclical sectors, the financials, the industrials, the materials, the energy, has been underperforming the market for quite some time. It's about close to about 1.5 months or 2 months or so already. So definitely we have this kind of rebound. That's pretty much normal that we start to see in these sectors. So given that it's only 1 week plus of we call kind of going up into the top of the table for these various cyclical sectors, the materials, the financials as well as industrials, it's very hard for me to actually say from a technical point of view that their performance has already starts to turn to outperform. So far, right, our Q3 cyclical underperformance team play is still pretty much intact, where we still favor high quality information technology sectors or stocks potentially that tend to outperform the cyclicals for Q3. All right. So now, before we go into the charts, right, let's take a quick look on the key economic data releases for this week. So all times are in Singapore timing. So these are the one to highlight over here is that you have RBNZ, we call it the New Zealand Central Bank interest rate decision, which is out on Wednesday 10 a.m. and its press conference was 11 a.m. So right now, what's market consensus is actually expecting it to actually hike rates. So if that being said, right, they are actually the first central banks in terms of the so-called more or less developed nations that actually starts to hike interest rate. The first one, all right. While the rest like ECB is still rather dovish. For the Fed is 50-50 depending on what happened in the next few months, especially on Jackson Hole, where whether we'll see Powell will give a more concrete evidence of tempering. Okay, so for US, it's the case of temper first, but when do we start? There's no concrete evidence. Then first interest rate hike likely will need to come in perhaps either middle of next year. Okay, middle of next year. Okay, so the rest will be the FOMC minutes. Okay, so we could actually dive deeper to see what's the debate going on like in the Federal Reserve officials among themselves, which is out at 2 a.m. Thursday time. Then most importantly, the end of the week, right, you have this China kind of a key interest rate data, which is the 1 year loan prime rate. This rate has been unchanged close to about 15 months or so plus plus. So given that today we start to see a very weak China GDP, China growth sensitive data like the industrial production and retail sales, which are pretty low in terms of growth. The growth slowed down. So for industrial production, growth slowed down to a 11-month low. Whereas for retail sales, we start to see four consecutive months of slow decline, slow growth decline. They are still growing, but they are growing at a very slow pace. So we could have some see this kind of peak growth narrative, right? That is also being intensified in the China economy. So right now, right, it seems to us that the probability for China central bank to actually loosen its pause string to be more fearful in reducing or increasing liquidity into the market to actually kind of stabilize growth seems to be get higher. There is more higher grounds to actually justify it. So definitely it's actually crucial to actually pay a close watch on Friday whether would they reduce this 1 year loan prime rate. If that could actually happen, it could actually boost short to medium term sentiment on China related stocks, which is actually potentially good for the Hang Seng Index, the Hang Seng Tech Index, at least from the short to medium term perspective. Okay, now key notable company earnings that we kickstart for Monday US will be at Roblox. Okay, this is the one of the key gaming multiverse stocks as well. Then you have traditional economy stock like Home Depot will actually give us an insight into the housing market in US. Then what's closer to Singapore, which is SEAC Limited, the parent company of Shopee, which is the major e-commerce platform in Southeast Asia. So pretty much interesting to see their stocks and uh, earnings guidance for these stocks. Okay, on Tuesday before the U.S. market open. All right. Then for certain two China big tech stock on the highlight is Tencent, which is Wednesday after the Hong Kong market close. Then followed by Meituan, which is on Thursday after the closure of the okay. Tencent will be Wednesday after the Hong Kong market close. Meituan will be on Thursday after the Hong Kong market close. All right. Good. So let us take a quick. Okay, then don't forget is we have two kind of a communication services related stocks. Cisco Q will be Wednesday after the market close. Then definitely followed by one of the U.S. Semiconductor chip maker NVIDIA, which is at Wednesday after the market close as well. All right. So now let's take a quick look at our chart. Okay, a deep dive into our chart. So as usual, right, before we talk about the major global stock indices, I would like to look at one of the risk proxy, which is the semiconductor ETF. So why I say risk proxy? Because it has a kind of a leading element to actually indicate to us whether there will be a potential either a major sell-off or a kind of a potential multi-week setback that will occur in the global stock indices space because this particular index is actually a proxy for risk. So it kind of have a bit of leading element to it. So what we could see over here is the iShares Philadelphia Semiconductor ETF that consists of, just think about it as consists of a basket of major semiconductor stock listed in the US stock exchange. So what we could see over here is that previously it managed to have a clear breakout from this close to about April, May, June, about three and a half months of range configuration, breakout on 30th of July. Then last week it managed to do a kind of a pullback. So this pullback is pretty healthy. What it happened is on Friday it managed to stay a rebound after a retest on this former 3.5 month range resistance, which is at 44970. Then what we could see here over here is that momentum is still pretty much healthy in terms of daily RSI is still holding above this key support level at 43 and 37%. So overall, right, what we could see is that the medium-term uptrend is still remains intact. So with the key medium-term pivotal support coming close to this lower boundary of this ascending channel that is in place since 23rd of September, and as well as the swing low of 19th of July, confluencing at the support level of 423.60. So potentially we are still looking for a further potential push up to test the next resistance at 495. Okay, so overall, what we could see over here is that given its leading kind of a potential leading properties, uh, the chances of a multi-week setback on the majority of the global stock indices, especially on the US stock indices, seems to be remote at this juncture. That means the probability is pretty low. That means what we could say over here is the multi-week uptrend still continues for the US stock indices and also for the majority of the global stock indices. Later I'll dive much into detail into Hong Kong and the Nikkei 225 is slightly different for the case. Okay, so now the strategy for S&P 500. Okay, the daily S&P 500, I still recall that last week we have the first potential target will be 4450/60. So we reached the first potential resistance or target. Last Friday, it actually printed a high of 4468. All right. So what we do over here is that given the first resistance has really been met, so we will actually tighten the key medium term pivotal support to 4380, yeah, to 4380, which is also the 50-day moving average. Okay, over here. Okay, close to the 50-day moving average. So now, for the 4-hour chart, right, what we could do over here is that 4380, tighten it over here. 4-hour RSI still remains positive in terms of momentum. No signs of exhaustion yet in terms of the short to medium term momentum study on the 4-hour RSI, holding above this significant support level at the 50%. Okay, close to the 50% mark over here. So what we could see over here, Titan to 4380, still looking for a potential push up to actually test the next resistance at 4540. Okay, so now moving on to the Nasdaq. So as you could see that Nasdaq last week was slightly actually underperformed the cyclicals, but overall, right, if we were to look at the bigger picture, right, on this chart over here is there's no signs of a topic formation. It's kind of a sideway. So in fact, to me, it's still pretty bullish. Higher low. You can see this low, this low, this low is getting is higher. It's a series of higher low, looking for a potential break above the current all-time high, which is at 5th of August at 15,185. So overall, it's still pretty much positive, as last week price is more like a consolidation before inching up higher again. So the 4-week or the 50-day moving average is coming to act as a support at 14,780, which is also the prior swing low, or the prior higher low, which of 27th of July, which is at 14,780. Okay, so what we do over here is that I will actually tighten or tidy up the key medium term pivotal support to 14,780. Still looking for a push up to test the next resistance at 15,240/300. A break above it should take us higher towards the next resistance at 15,600/630. So what we could see over here is that the RSI has really given a pre-signal of this bullish breakout from this resistance over here. Why? Because of, if you look at this prior descending resistance that was capping it previously, has managed to stage a bullish breakout last week, and now it actually retest this former descending resistance line, now turns into a pullback support, indicating to us the short to medium term outside momentum has in fact started to actually resurface, which has a leading element ahead of price action. So what it's telling us over here is that the 4-hour RSI is indicating to us a potential high probability that we may start to see new fresh highs soon on the Nasdaq 100 index. So that's overall is I'm actually keeping my bullish stance for this week as well for the Nasdaq 100 with 14,780 as my key medium term pivotal support. Now, quickly to the Hong Kong 50. So Hong Kong 50, what we could see over here is ever since the test on this 25,760 long-term pivotal support. So very quickly go to the weekly chart again. Why is it a pivotal support? Very clearly you could see over here the lower boundary of this ascending channel that is in place since 20th March low, and also the former descending resistance, long-term one since Jan 2018, now turns into a pullback support, and the former swing high area of 5th of July. So all of them are confluencing at this 25,760 level. So what we could see over here is that after 2 week of positive, after last week was a positive movement. 2 weeks of positive movement, and from this key long-term pivotal support. Then at the start of this week, right, today, it kind of did a bit of muted lackluster move. Okay, due to the release of this weaker than expected growth numbers on the China retail sales and industrial production, which I actually shared with you earlier. So if I'll go to the strategy chart, right, so it seems to pull back a bit, but so to me, right, still no change. So I'm still expecting a bit of churning. RSI still managed to hold above this former resistance, now turns to the pullback support level at the 39% level. So I'm still using 25,760 as the pivotal support to watch for this week, which is the long-term pivot. uh, looking for pushback up to test the intermediate resistance at 27,030. So we need to have a 4-hour close above 27,030 before we can see a further potential push up to test this swing high area of 15th of July and 16th of July, which is 28,160, and also the channel resistance of this descending channel that is in place since 18th of Feb 2021 high. Okay, so if we have a 4-hour close below 25,760, then we could have another retest again to that low, to that recent low that we see so far on 27th of July, which is at 25,750 on the Hong Kong 50 index. All right. Now, moving on next will be the Nikkei 225 or the Japan 225. Okay. So for the Japan 225, right, like we say, we go to the daily chart first. Okay, switch on to the daily chart. So we could go to the daily chart, right? What we could see over here is that it's churning inside this kind of a very complex kind of a consolidating configuration since 16th of Feb high. All right, not so clear of a kind of a impulsive down move. So it's kind of a trap right here right now at 25,500 slash 26,880. So what is 26,880? 26,880 is our long-term pivotal support that we set for this quarter, which is this level here, as you could see, and also the 50-week moving average. All right, 26,880. So with that, I could not validate any further down move, okay, because it hasn't break below the 26,880 yet for the last 3 weeks or so. So what we could do over here, right, for this week, right, still no change. So I have the neutrality zone, sideways zone between 28,250, which it managed to bounce last week and it came back down again. So it's neutral between these two range. So I'm still expecting churning between these two range, 28,250 and 26,880. Unless you have a 4-hour close above 28,250, then we could see a further push up towards 28,860. Then this range and 29,600. Otherwise, it will be likely sideways inside this neutrality zone of 28,250 and 26,880. Okay, then now the last one will be the German 30 index. So as you can see that the German 30 index has managed to break above the June range top high, which is 15,180. Okay, so very clear break above this level, 15,810 level, 15,700, the previous range high, which is close to about 2 months plus of range sideways configuration. Managed to break out last week to state a fresh new all-time high. So last week high was 16,030, which is very close to our first resistor at 16,070. Okay, very close. So yes, even though it's close to the first resistance, there's no sign of exhaustion. We talk about medium-term exhaustion that will increase the risk of a medium-term pullback. So we're still looking for further higher high potentially, given the positive price action configuration seen so far. So what we do over here is that the 50-day moving average is now coming to support at this 15,810 slash 700 level. So what we could do is for the German 30 index, right, we could actually kind of tighten the pivotal support level, okay, from 15,200 to 15,420, which is the swing low level of 28th of July to 2nd of August, and also the lower boundary of this kind of a medium-term ascending channel since the low of February 2021. So what we could see over here is a further potential push up towards 16,070 slash 200. Then a 4-hour close above it should take us higher towards 16,530 slash 685, with the Titan key medium-term pivotal support as 15,420 to act as the make or break level for the bullish buyers that we maintain for this week on the German 30 index. So overall, what we could see over here is that in terms of biasness, all the indices we're still expecting a kind of a bounce. So the one that expecting to see new potential fresh all-time high will be the German 30 index, which I shared earlier, followed by the S&P 500 and the Nasdaq 100. That as for the Nikkei 225, it's still stuck within that range neutrality zone. Then for the Hong Kong 50 index, potentially we could see a tactical bounce again towards the top of its range. All right. So with that, do have a great trading week ahead, and I see you next in my next video.